Everyone, how's it going? Welcome back to our stock market outlook video sponsored by MarketSmith. As always, today we're going to cover the market indexes, leading stocks, a few different sources of sentiment, the IBD Big Picture article, and finally the Wishing Wealth GMI signal. And if you do enjoy my analysis and find my videos helpful, what really helps me out is leaving a like down below on the video, and of course subscribing if you're new to the channel and this is your first time hearing this analysis. So with that said, let's dive right in with the analysis of the NASDAQ composite. Overall, last week we basically resumed the market correction after we broke under the short-term range here on this Thursday and Friday. We saw a lot of kind of downside reversals earlier on in the week. We saw leadership groups continue to kind of deteriorate, the shipping names in general, which we'll get into later. And right now we're just back into that corrective state after we undercut that 21 EMA, which we had been basically building above. Now looking over at a weekly chart, let's go over to that time frame. You can see that we basically rallied into that 10-week moving average, the downtrending 10-week moving average, and just kind of bounced below it. So this looks pretty much nothing different than a normal bear market rally. And what remains to be seen is whether we find support basically next week, or this is basically the start of another leg down where we've kind of had one leg, the second leg, and now a potential third leg down of this bear market, which is actually pretty common going back to the 2008 bear market. We saw 3 legs down with the last one being kind of accelerated. But once again, we don't have to make predictions. All we have to do is kind of take it day by day, look at the overall indexes, the leading names, and they will kind of let us know when things are setting up for another bull market and a new uptrend. So with that, let's move on over to the S&P 500 and take a look at that chart as well. It does look pretty similar. Basically, we were forming that same kind of tight range. Looks like we were potentially going to resume higher, test that 50 SMA, but we got that rejection and basically undercutting this range once again on this Thursday and following through to the downside on this Friday right here. Now let's actually take it over to a 60-minute chart and kind of talk about how this uptrend kind of started. This is the prior downtrend. This is the start of the move up where we did see some opportunities to the long side. And basically we had a push lower. Then we kind of formed an intermediate swing low here. We pushed upward and then formed a higher low at this point. And then from this point on, even though we had a gap down, we kind of stuck this landing here and pushed up and was able to break through this intermediate swing high. And that's where really in full force, a lot of stocks started moving and we saw chances and opportunities to the long side. So from here, we pushed upwards. We're able to break above this significant level. And then we basically pushed above it, formed a range. It looks like we were going to hold this area right here. But when we're in this type of range, basically we can break to either side. And in this case, we broke below it and really accelerated to the downside into the end of the day on Thursday. And then on Friday, we had a gap down, an attempted move up, and then a very poor close on high volume. And moving back to the NASDAQ composite, you can see the same type of formation. We had the wedge pop on the hourly time frame right here, opportunities to the long side in this area, as well as just within this range. We saw individual stocks breaking out. And then we kind of broke expectations, broke below this range. That was definitely the warning sign, and really stocks stopped really working after this gap up and poor action on this day. We tried to resume, couldn't fill this very subtle gap right below here where we had a gap down here and we weren't able to push and basically fill that gap here. And that was a sign of weakness. And then we kind of leaked below the short-term moving averages and just to the downside. And then once again, bad gap down, fall through to the downside, an attempted move up, and then a poor close on Friday. So that's kind of the shorter term time frame. And if you're a swing trader, day trader, you want to be looking a little bit more at the internals like this and trying to find what is the short term trend. But if you're more of a swing trader or just a position trader in general, take a look at that daily chart trend, use that 21 EMA. That's extremely useful. And for the position traders, you really want to be looking at the weekly trend and looking at that 10-week line. Are we above it, building above it? Are we above a rising 10-week line? And also, what is the weekly trend? Are we in a stage for uptrend like we were throughout this entire bull market? Or now has the tide basically turned and the overall trend has shifted and now we're stuck below a declining 40-week, 30-week moving average and now are in a stage for downtrend per Stan Weinstein. All this should kind of inform your decision in terms of how aggressive you should be at the given time. And basically for most styles right now, if you're not a day trader who loves the volatility, you should be, backing off everything, focusing on other things, reading some great books, taking courses, doing whatever you can, improving your trading rules so that when the next uptrend basically occurs once again, because it will happen eventually, you'll be ready to take advantage of those amazing opportunities, because I think it's important to remember that the best opportunities come from these very significant corrections, because it kind of resets everything. New names will pop up and lead during the next cycle. And just going back to the monthly chart, you can see the significant correction here in 2008, obviously 2000, and think of all the amazing true market leaders that were kind of birthed within this time. And during these uptrends, we saw stocks double, triple, quadruple, 10x. So look forward to that. But right now, it's really the time to preserve both your mental and financial capital, so you're ready to take advantage of those opportunities. So that's a quick run through of the indexes. Let's also take a look at a few more kind of general market indexes that I like to take a look at. First up, we've got the IWM. Let's go back to a daily chart. And this had been holding up better because we had formed a higher low here versus the NASDAQ and S&P 500, which had undercut this low. But once again, we saw kind of a bear flag break to the downside on Thursday, fall through to the downside on Friday. A lot of overhead supply here in this name, and we basically failed right at this key level, which I was watching pretty closely. Also looking at small cap growth, specifically, we failed at that pretty much same spot, downtrending 50 SMA, breaking this bear flag, fall through to the downside on Friday. Just basically no man's land here. Do we stick it? Do we undercut these lows? No one knows for sure. You just have to take it day by day. And lastly, taking a look at the FFTY, you can see that this looks pretty similar. Rising wedge, whatever you want to call it, bear flag on declining volume. And then basically, after this very strong day, right at the 50 SMA, it failed and undercut this level on Thursday, fall through the downside on Friday. And once again, strong downtrend, and you've got a lot of overhead supply now to deal with the names within this index. So that's pretty much it from an index point of view. We're basically back below the moving averages. We're in a downtrend on most time frames, and now we just have to see where it goes from here. Moving on to the mega caps, let's first take a look at Tesla. A lot of these were also weak last week. They're in downtrends below declining 50, 200 SMA, so these need a lot of time to base out, form out another structure. And we saw negative action, downside reversal here on Friday, or actually on Thursday, and then fall through to the downside here on Friday on higher volume. Looking at Apple, this also failed pretty badly here on this Thursday after a little downside reversal here on that Wednesday, and then fall through to the downside on this Friday. Looking at Amazon, another mega cap here. This is pretty weak here, and it was kind of interesting because this had been performing extremely well during the short-term bear market rally, but we had that big downside reversal here where we had a gap up and go, and then close pretty much right at the lows, and then the rest of the week it went sideways, and then we fall through to the downside through this level right here. So if you're looking for shorts, this is the type of setup that you basically want to see, a rally within an overall downtrend into a prior potential area of resistance, the top of this gap, and also going over to a weekly chart. I bet you this is the downtrending 10-week line. Yep. So you can see the negative action here off that key moving average. Lastly, let's take a look at Facebook and Netflix. Facebook, I guess it's changed to Meta now. Here we go. You can see a lot of distribution down here. It's basically, been chopping sideways for a few months now, but doesn't look constructive. And we had that failure once again late last week, Thursday and Friday. Lastly, we've got Netflix, which also has seen a lot of gap downs, a lot of distribution, and just is well off highs and within a longer term downtrend. And also taking a look at Nvidia, you can see that once again, we were forming something. Semis looked like they were really shaping up, but then we saw a failure on Wednesday, Thursday, Friday, and a break of this kind of swing structure that we had been kind of building above that 21 EMA. But now we still have that 50 SMA downtrending to deal with, and really things have to go sideways, build, get back above those moving averages, let that curl up under price, and then maybe we can see a sustained move up. But until then, any kind of rally when those moving averages are declining is kind of suspect, and most likely we want to be focused on those stocks that are already above those moving averages, bucking the overall trend, and they could even be names that we haven't really heard of. Those could be the next market leader. So stay aware of that. Don't be biased by focusing on the 2020, 2021 leaders. Most likely the strongest performers going forward will be names that are completely new to us and recent IPOs as well, or just overall turnaround companies that have great earnings growth, sales growth, new and innovative products, and fit that kind of cancel mold. And most importantly, they've got that price strength and little overhead supply to deal with when they do break out from their bases. So with that, let's go through a few other names. First, taking a look at the shippers. This was a group that was acting well above the moving averages, but then the market came for this one as well. We saw a gap down here after kind of a failed breakout at this point. And you can see Wednesday, Thursday, Friday, a lot of distribution. If you go to the other names in this group, GOGL also failed here. SBLK was another name I was watching. Grin, the entire group kind of showed the distribution. And that was definitely a warning sign for me that a group that had been performing well, that looked like it was getting some rotation into it, just kind of fell apart and undercut those 50 SMAs on their charts. Also taking a look at the semis, these were shaping up well off the bottom. You had some names like ON that was acting a lot stronger, and still it's holding up better than most stocks in the market right near the 21 EMA, but it looks like it just needs a little bit of time and is definitely acting extremely volatile as of this moment. GFS, another name I was watching in this area, not great action. You've got some names like PLAB, super strong here off the bottom, still holding above its pivot, so this is still worth keeping an eye on, especially if the overall market firms up. But right now, the overall group just doesn't really have too much going for it as of this moment. Also taking a look at some of the oil and gas names. These have been holding up much better than most. They've been the leaders really for the majority of this year, but we are seeing that kind of same signs of distribution, and you definitely want to see these hold above their rising 50 SMAs, which has been support numerous times during this uptrend. And it's not a great look to see downside reversals and kind of undercuts of these ranges. And maybe they just need more time and can form out bases. But at this point, some of these are forming stage 3 bases. If you go to the coal names, we've got Arch holding up reasonably well, but this is a stage 3, and this is very wide and loose, very choppy, tough to trade. So worth keeping an eye on to see if it can firm up and tighten. But right now, it's just kind of the only area to look for in the market. And we'll see if kind of it's the last leaders that get taken out at the very end. And we really start a downtrend in the overall market. So if you're watching for strength, keep an eye on these. But overall, they could just be the last names that get taken out and really start downtrends back towards either 50 SMAs and even 200 SMAs if we do get one more leg down in the general markets. So with that, let's move on now to sentiment. All right, so first taking a look at my Twitter surveys, we saw a decline in bullishness from about 35% to now 22%. Definitely a significant drop, but this is often very biased by the action on Friday. And obviously we had the gap down, poor close as well. So overall, it doesn't surprise me that we're this low, but it's good to see that there's a lot of fear in this market from a contrarian point of view. Moving on to the name exposure index, however, we are actually seeing this increase recently. So it'll be interesting to see what numbers come out next Wednesday. But we're actually back up to 50. So I definitely want to see this tick downwards as well. Looking at the bears versus bulls chart here, we're still higher on the bear side of things, but once again, the price action of the indexes and individual stocks matters much more than this overall indicator. And looking at the put-call ratio, we still have a ways to go, honestly, to get back up to that 1.2 level where we really see a lot of fear come into the market. So overall, sentiment is getting more bearish, but still has a little bit to go here. And we'll see if we get one more leg down, undercut those year-to-date lows, whether we see that flush on this put-call ratio. Moving on to the IBD big picture article, the headline is stock market battered as inflation hits new high, investors go for gold. Reading through to discuss the action of the market after that CPI reading, which definitely hurt the market. They discuss how small caps suffered, how they've changed their outlook now, and overall their current view is now market in correction. You've got some leaders up in volume and down in volume as well. Lastly, we've got the wishing wealth at GMI signal, which it says green here, but this was on Thursday, and Friday it would have changed to red, so keep that in mind. So overall, my current market outlook is once again a market in correction. We did have a tradable rally to the upside for 1, 2, 2.5 weeks there, where there were some opportunities, but right now we're back to a poor environment. We're extremely volatile here as well. So if you're a position trader, most likely you're best served by doing studies, reading, improving your rules, that type of thing during this type of environment. If you're a short-term trader, maybe you like this volatility, but it's not a time where you're going to get swings for a few weeks, few months. Right now, trends are only lasting a few days at most. So overall, stay safe. Keep that in mind. Protect both your financial and mental capital so you're ready for the next uptrend. So with that said, I hope you guys enjoyed this video. If you did, please go ahead and leave a like down below. It really helps me out and my channel. And of course, subscribe if you want to see more videos just like this one every single week. Thanks again for watching, and I'll see you guys in future videos. Take care.